You have probably seen the headline by now. Your Social Security card will be invalid starting next month. And if you haven't seen it, someone you know has, because that story went everywhere in the last few weeks. Here's the thing. The panic around the card itself is almost entirely wrong. But while everyone was arguing about a piece of paper, 3 real things to your Social Security situation slipped by without nearly enough attention. One of them is a fraud scheme that is actively targeting seniors right now, today, and the people most exposed are the ones who haven't taken a specific 15-minute step. One involves a tax deduction that was available on the return most of you just filed last month, and most of you didn't get it. I want to show you exactly how to recover that money. By the end of this, you will have the full picture and the specific action for each one. Before we go any further, everything here is general information, not financial or legal advice. These are federal programs and tax rules. Your specific situation may vary, and for the amended return especially, a tax professional can confirm the details before you file. If this kind of breakdown is what you're looking for, where I go through the actual rules and give you the numbers, subscribe now. This channel covers Social Security, Medicare, and senior benefits every week. When something changes, you'll hear it here first. Let's start with the card, because that is what everyone is asking about. Your paper Social Security card is not being canceled. It has not been declared invalid. There is no deadline you must meet or your benefits stop. That is simply not what is happening. Anyone saying otherwise is either wrong or trying to get a click. What is actually happening is that the SSA is rolling out digital access to your Social Security number through the My Social Security portal at ssa.gov. If you have an online account, you can now view your SSN on your phone or computer without needing to find the physical card. The number has always been what matters. The card is just how you carried it. The digital option is an addition, not a replacement. Here is the context that makes this make sense. Right now, there are 47 different versions of the Social Security card in circulation. Some of them were issued before 1983. No holograms, no security features, easy to copy. The digital system is a modernization of how people access and verify their number, not a cancellation of what they already have. And here is how a story like this takes off. The SSA puts out a notice about digital modernization. Someone reads it, summarizes it badly, and turns "we are adding a digital option" into "your card is being canceled." The post goes viral. The people most likely to act on the bad version of the story, the ones who pull out their card and start worrying, are the same people real scammers track the second they smell confusion. Which brings me to what is actually urgent. So the card is fine, but there is something connected to this that genuinely is, and it has nothing to do with the card expiring. There is a documented and growing fraud scheme that targets seniors who have not yet created a My Social Security account. Here is exactly how it works. Scammers use personal information from data breaches, information that is already out there, to create a My Social Security account in your name before you do. Once they're inside your account, they can view your benefit records, they can change your direct deposit banking information, and they can redirect your monthly payments to themselves. That last part, think about what that means. Your check, rerouted. Not stolen after it arrives, redirected before you ever see it. The protection is straightforward. If you create your account first, no one else can create one in your name. That is the entire defense. Go to ssa.gov, click on My Social Security, and set it up. It takes about 15 minutes, and it is free. The account creation race only goes one way. Once you have claimed your own portal, no scammer can later step in and pose as you to set it up. Win that race, and this particular attack vector is closed for you, permanently. A question I get often: what if a scammer already created an account in your name? It happens, and there is a specific recovery path. Call SSA at 1-800-772-1213 and tell them you need to dispute and reclaim an account opened without your consent. In some cases, that means an in-person visit to your local SSA field office with photo ID. While you are at it, file an identity theft report at identitytheft.gov, which is the FTC's official portal. And if a tax return has been filed in your name that you did not authorize, the IRS has its own form for this, Form 14039, the Identity Theft Affidavit. Once the account is genuinely yours, log in at least every 6 months. Verify the direct deposit information on file matches the bank account you actually have, and turn on the extra security setting that texts you a code whenever someone tries to sign in. That single setting blocks most takeover attempts cold. Now I want to tell you about something that almost no one covered properly. And if you filed your 2025 taxes last month, this section may directly put money back in your pocket. Did you already file your 2025 taxes? Drop a yes or no in the comments below. I want to know how many people watching this were aware of what I'm about to explain before filing. That answer tells me a lot about where the biggest gaps are in what people actually know. In July 2025, Congress passed the One Big Beautiful Bill Act. Among its provisions was a new federal tax deduction specifically for Americans 65 and older. Starting with the 2025 tax year, the return that was due April 15, 2026, eligible seniors can claim an additional $6,000 if filing single, or $12,000 if married filing jointly. This is on top of the standard deduction, not instead of it. To qualify, your modified adjusted gross income needs to be under $75,000 if you are single, or under $150,000 if you are married filing jointly. Why does this connect to your Social Security? Because up to 85% of your Social Security benefit can be federally taxable, depending on your total income. That rule has been on the books since 1984, using thresholds that were never adjusted for inflation. They now capture the majority of retirees. The new $6,000 deduction lowers your taxable income enough that some recipients will owe zero federal tax on their Social Security benefit for the first time in years. Let me give you a sense of what that looks like in dollar terms. Say you are a single retiree, 68 years old, with an adjusted gross income around $45,000, mostly Social Security plus some modest IRA withdrawals. You sit below the $75,000 cap, so you qualify in full. The $6,000 deduction comes straight off your taxable income. In the 12% federal bracket, that one deduction translates to roughly $720 less in tax for the year. In the 22% bracket, it is closer to $1,320. For a married couple filing jointly under the $150,000 cap, the $12,000 figure can save somewhere between $1,200 and $2,600, depending on bracket. Real money, every year going forward, not a one-time check. Here's the urgent part. The April 15th deadline has passed. Most of you already filed. And if you did not know about this deduction when you filed, you likely left money on the table. But you can get it back. The IRS allows you to file an amended return using Form 1040-X to claim deductions you missed the first time. Tax filing services, including TurboTax, have confirmed that a senior who filed the 2025 return without this deduction is a valid reason to amend. Processing takes up to 16 weeks, but the refund is yours. Here is exactly what to check. Pull up your 2025 return. Look for Schedule 1A and a line for the Senior Enhanced Deduction. If that line is empty or the schedule is missing entirely, you have a recoverable deduction sitting there unclaimed. File Form 1040-X with your income documentation, and the money comes back to you. This is your money. The law created it, you qualify, and the IRS has a form specifically designed for this situation. 2 practical notes before we close. First, if your state has an income tax, and 41 of them do, check whether your state's system carries this federal deduction through. Some states start their calculation from your federal adjusted gross income and may benefit you automatically. Others run their own rules and do not. The simplest check is the state tax line on your 2025 return. If it looks higher than you expected, call your state tax department or ask a local preparer. Second, timing matters on the amendment. Do not send Form 1040-X until your original 2025 return has been fully processed and any refund from it has actually arrived. Filing an amendment on top of an unprocessed return is the most common reason people see months of extra delay. Wait for the original to clear, then amend. And if you want help filing it, the IRS supports 2 free programs designed for exactly this kind of senior amendment, at no cost. Tax Counseling for the Elderly, TCE, and Volunteer Income Tax Assistance, VITA. Find a site near you by calling 1-800-906-9887 or searching IRS Free Tax Help on irs.gov. So here is the full picture. The paper Social Security card is not being canceled. The panic was wrong. The card you have is fine, and there is no deadline to act on it. But creating your My Social Security account at ssa.gov is genuinely urgent. Not because of the card, but because of the fraud scheme targeting people who haven't set one up yet. 15 minutes and it's done. Win that race today. And the $6,000 senior tax deduction from the One Big Beautiful Bill Act applied to your 2025 return. If you filed without it, it is recoverable through Form 1040-X. Check your return for Schedule 1A. If the deduction isn't there, amend. That money belongs to you. If someone you know is on Social Security or Medicare, share this with them. The card story got attention. These 3 things didn't, and they are the ones that actually move the needle on what reaches your account. Subscribe so you don't miss what comes next.